DCB Bank is an Indian bank with a market cap of around 4,416 crores as of July 24th, 2025. It's currently trading at a market price of 140 rupees per share, and its book value per share it's around 181 rupees, meaning the company is trading at value at a discount to book value. Its return on equity is 11.4%, return on capital employed approximately 7.67%. Both these numbers do not seem very bad for a bank. The stock PE is around 7.18. So, how is DCB Bank doing financially? Let's find out. Here we have the bank's profit and loss. This is from March 2014 to March 2025. So we have data spanning over 11 years. So in March 2014, it had a revenue of 1,128 crores. And in March 2025, we had revenue of 6,471 crore rupees. Now, you see these percentage numbers right below the revenue. These are the growth numbers. How fast is it growing? So 20%, 20.67% revenue growth in 2025, 27.766% in 2024, 19.57% 2023. So we see more than or equal to 20% growth in revenue for the past 3 years. Of course, 1.58 growth 2022. So 2020, 2022, the COVID effect. But before that, also, we can see double digit growth rates frequently reaching above 20%. Okay, moving downwards, let's see the profit. 615 crores of profit in 2025, a nice increase over the 536 crores in profit in 2024. Here we can see the compounded sales growth. So the compounded sales growth of this bank was 16% for the past 10 years. Profit growth of 12% past 10 years. The last 3 years have been very good for the bank. We have seen a 23% growth in sales for the past 3 years and a 29% increase in profits over the past 3 years. The stock price done pretty well, and return on equity very stable, currently around 11.4% we saw. But for the last 10 years, not bad, not bad at all. So we have now looked at the revenue, we have now looked at the profit. But of course, when we are looking at banks, there are more things to look into. So let's take a look at those. Now, here we have some of the performance highlights for fiscal year 2025. Advances grew by 24.73% to 51,047 crores. So 51,047 crores advances. Here we have deposits of 60,000 crores, also having a 21% growth rate year on year. Very nice growth numbers. Now we have the gross non-performing assets currently at 2.99, which is a decline from last year's 3.23. And we have now net NPA numbers 1.12, which is a slight increase from previous year's 1.11%. Here we can see the provision coverage ratio standing at 74.48% and capital adequacy ratio 16.77%, well above the minimum requirements set by the RBI, and current account and savings account ratio of 24.52. It's in the mid 20s, which is not bad at all. Uh, Slightly declined, but okay. And profit registering an increase of 14.81%. Now, few more things we can look into this. Okay, a well penetrated distribution network, a head count of 11,057 people. So it employed around 11,057 people and 464 branches as of March 2025. So where are these branches? Now, here we can look at branches statewide branches. So 16% of its branches were in Maharashtra. However, the largest 19% of its branches were located in Gujarat. So almost one fifth of branches in Gujarat, very Gujarat heavy, West Coast heavy bank. 12% in Odisha. We had 8% of branches in Telangana, and so on and so on and so on. The locations go on. So is it pretty diversified? Mm, fairly diversified, we can say, in terms of locations. 28% of its branches were in metro regions, 28% in urban. Then we had 19% rural and 25% semi-urban. Uh, Moving on, let's look at a few more important data points. Hmm, Advances. Hmm, So these are total advances. Now, March 2025, we already saw this 51,047 crores. Here we can see it's rising very well. These are past quarter numbers. So 47,780 crores just in the previous quarter. So we are seeing solid growth. Now, the how are these advances divided as of, let's say, product? Who are these advances being given to? Which sector? And for what purposes are these advances being given for? So, coming at a massive 43.6% of total advances, we have mortgages. So 43% of its loans are given out for mortgages secured. Then 23% comes under this category known as agri and inclusive banking. And so 9.2% additional is in the form of mortgages. So 43% here mortgages, 9.2% here mortgages. So 50% of its loans we can say are for mortgages. And who do we have? Next 13% is in the form, let me see, next 13% is in the form of co-lending. In the form of co-lending, then we have other smaller ventures like 5.7% of loans is in corporate banking. Gold loans makes a very small percentage here too. So mostly very mortgage heavy bank, right? So moving on. So in summary, we see 50% coming from mortgages. Then we have corporate banking. We have gold loans, loans to businesses, small and medium, micro, small and medium businesses. Loans are being given there too. Moving on, the deposits. Who are they getting the deposits from? Now, we can see here 45,310 crores of its 60,031 crores total deposits is in the form of term deposits. And then the rest, 14,721, which we saw was around 24% of its deposits, is in the form of current accounts and savings accounts. Moving on, we can see here the term deposits mix. So 76.7% of its term deposits only is residents of India's. Then we have non-residents term deposits making up 7.5%, and the rest 15.8% is coming from interbank term deposits. Moving on, we have another. Oh yes, now this is important. So these are some of its key ratios we are going to be looking at. Now we have yield on advances around 11.47%, a bit on the higher side in talking about the last 5 years. Cost of funds, 7.23%. Cost of deposits, 7.15%. Now, net interest margin, taken a bit of a hit for the over the past 3 years, 3.31% as of fiscal 2025, declining, let's say, over the past 2 years at least. The return equity, it says here 12.3% on the rise. The return on assets, a bit declined over the last 3 years. The cost to income ratio at 63.7%, a bit on the higher side. Cost to average assets, 2.64%, which is a slight decline over the previous year's 2.68%. Moving on, here we have the capital adequacy ratio, 16.77%. Of this, 14.30% is tier 1 capital. Tier 1 capital is the highest quality of capital. Then we have tier 2, making up a smaller 2.47%. Here we have the risk weighted assets of the banks. As a percentage of total assets, they're actually down, currently 49.43%. So below 50%. Risk weighted assets as a percentage of total assets are currently below 50%. Very nice. Now, lastly, we have this fee income and non interest income. Now, as you know, banks mostly make their money from interest on loans, but they make a smaller portion of their money from other sources of income. Here we have these other sources. Now, in sorry, so this quarter we have the non-interest income 219 crore rupees. This quarter of non-interest income, of this the core fee income was 161. Here we can see that non-interest income has been growing very consistently. And according to the bank's management, they have said that this momentum, this growth in non-interest income is pretty sustainable. So I guess that's it. Uh, do tell your opinions on DCB Bank and any other opinions you have on this bank. That's it. I think those were the same two sentences. Have a good